Welcome to ETH Daily, a daily briefing on the latest in Ethereum. Here's your latest for Thursday, June 11th, 2026. Fidelity's FIDD stablecoin goes live on Curve and Uniswap. Socket relaunches its core infrastructure. Coinbase launches agent accounts and adds a high-yield USDC vault powered by Morpho. All this and more starts right after this message. ETH Daily sponsorships are now open. Reach over 10,000 Ethereum native subscribers every weekday. Learn more at ethdaily.io/ads. Uniswap and Curve Finance has been selected as the liquidity layers for the Fidelity Digital Dollar, FIDD, marking the stablecoin's deployment into DeFi. Fidelity Digital Dollar liquidity pools are now live on Uniswap and Curve. The move brings one of the world's largest asset managers deeper on-chain by leveraging DeFi infrastructure. FID is a US dollar-pegged stablecoin issued by Fidelity Digital Assets, National Association, a subsidiary of Fidelity Investments, and is redeemable one-to-one for USD through Fidelity platforms. Fidelity Digital Assets launched FIDD on Ethereum in February, targeting both retail and institutional investors, with Fidelity managing issuance, reserves, and daily transparency disclosures. The stablecoin currently has a market cap of roughly $40 million. The DeFi integration positions FIDD to circulate across permissionless liquidity venues rather than remaining confined to Fidelity platforms, a step toward broader on-chain adoption for institution-issued stablecoins. Socket Protocol relaunched a rebuilt version of its core infrastructure, featuring 8x faster execution and more than 150 integrations across 60 networks. The team also made its routing engine free for all developers, removing the custom enterprise deals it previously required. Developers can use the stack to enable cross-chain features including bridging, swaps, and asset transfers. The relaunch targets agents, neobank vibe coders, one-chain RWA builders, and anyone looking to connect to idle fiat deposits. Socket says its infrastructure has powered more than $30 billion in asset transfers for Coinbase, Gemini, and Kraken. Coinbase introduced a new high-yield USDC lending vault, expanding its Morpho-powered Earn integration to 2 vault options curated by Stakehouse Financial on Base. The high-yield vault generates returns by lending USDC against dynamic, price-variable collateral, including assets powered by Athena, where borrowers typically pay a premium that creates the potential for higher market-determined yields. Coinbase said it is working with Athena to drive growth for the vault. The high-yield option joins the existing core USDC vault, which lends against blue-chip collateral such as BTC and ETH. Both run through smart contract wallets that connect to the Morpho protocol, allocating deposits across lending markets to optimize returns, with funds withdrawable at any time when liquidity permits. Coinbase also introduced Coinbase for Agents, a service that connects an AI agent directly to a user's Coinbase account to trade, pay, and execute workflows within preset limits. It is available today as both an MCP for web-based harnesses like ChatGPT and Claude Web, and a CLI Plus skill built for terminal environments like Claude Code, Codex, and OpenClaw. The product lets an agent handle both financial reasoning and execution, closing the gap left by LLMs that lack portfolio context and cannot transact. Coinbase outlined use cases including strategy-led portfolio rebalancing with limit orders triggered on 5%, 10%, or 15% dips, around-the-clock capital efficiency monitoring of idle funds, and data-informed trades. Crypto spot and derivatives trading is fully enabled now, with stocks, index funds, prediction markets, and commodities to follow. The launch builds on Agent Kit and the X402 payments protocol. This was a roundup of today's top news stories in Ethereum. You can support this podcast by subscribing and following us at ETH Daily. Also, subscribe to our newsletter at ethdaily.io.